Small caps have been stung by big losses this year. Some investors think that may be about to change. Shares of many small U.S.-focused companies have raced ahead of the broader stock market in July. Some investors think that signals more room to run for small capitalization companies, which can often be more agile and react more quickly to economic changes, including a recession. The iShares Russell 2000 ETF (IWM), which tracks the benchmark Russell 2000 index of small caps, gained 5.7% over the past week. Shares of many small U.S. companies have outperformed the broader stock market in July, the Wall Street Journal reports. So far in July, the Russell 2000 gained 3.6% compared to the 3.1% rise for the S&P 500. Let's see in this video what exactly is happening with the small cap stocks and whether it's a good time to invest or not. Number 1. What are small caps? A small cap is a public company whose total market value or market capitalization is about $300 million to $2 billion. The precise figures vary. Small cap investors generally are looking for up-and-coming young companies that are growing fast. That is, they're looking for the large caps of the future. The cap in small cap stands for capitalization. The term in its entirety is market capitalization. This is the market's current estimate of the total dollar value of a company's outstanding shares. To calculate a company's market capitalization, multiply its current share price by the number of outstanding shares. Classifications such as large cap or small cap are approximations that change over time. Furthermore, the precise definition of small cap stocks versus large cap stocks may vary among brokers. Number 2. Chances of growing in small cap stocks. One misconception about small caps is that they are startups or brand new companies. In reality, many small cap companies are well-established businesses with strong track records and great financials. And because they are smaller, small cap share prices have a greater chance of growth. Number 3. Investing in small cap versus large cap companies. As a rule, small cap companies offer investors more room for growth but also bring greater risk and volatility than large cap companies. A large cap offering has a market capitalization of $10 billion or higher. For large cap companies such as General Electric or GE and Coca-Cola (KO), aggressive growth may be in the rearview mirror. Such companies offer investors stability and dividends but rarely fast growth. Historically, small cap stocks have outperformed large cap stocks. That said, whether smaller or larger companies perform better varies over time based on the broader economic climate. One advantage of investing in small cap stocks is the opportunity to beat institutional investors. Many mutual funds have internal rules that restrict them from buying small cap companies. In addition, the Investment Company Act of 1940 prohibits mutual funds from owning more than 10% of a company's voting stock. This makes it difficult for mutual funds to build a meaningful position in small cap stocks. Number 4. Small cap versus mid cap. Investors who want the best of both worlds might consider mid-cap companies, which have market capitalization between $2 billion and $10 billion. Historically, these companies can offer more stability than small-cap companies, yet confer more growth potential than large-cap companies. However, for self-directed investors, spending the time to sift through small caps to find a diamond in the rough can prove to be time well spent. Even in our data-rich world, great small-cap investments fly under investor radar because they got little coverage from analysts. Number 5. Small cap stocks and the Russell 2000. The Russell 2000 is a small cap stock market index composed of the 2,000 smallest companies in the Russell 3000. The index is frequently used as a benchmark for measuring the performance of small cap mutual funds. The S&P and Dow Jones indices focus on large cap stocks. Thus, investors hoping to track small cap stocks' performance should keep their eyes glued to the Russell 2000 or the S&P 600, a similar small cap index. Like the rest of the market, the Russell 2000 has had a tough year so far, On January 3, 2022, the index was trading at $2,272.56, but by June 30, 2022, its value was $1,707.99. Of course, not every stock in the index fared badly, but a market like this one indicates that you want to do your homework before you invest. As we mentioned before, by the first half of July, the Russell 2000 gained 3.6% compared to the 3.1% rise for the S&P 500. According to Morningstar, small-cap stocks are trading at 19% discount. Thus, they offer better opportunities against the mid-cap, trading at an 11% discount, and large-cap, trading at a 13% discount stocks. The recent rally marks a reversal for small capitalization stocks, which have mostly fallen behind their large-cap peers in the S&P 500 for most of the year. The small-cap category's underperformance may be attributed to their greater sensitivity to fears of an economic recession, since they are more closely tied to the well-being to the domestic economy compared to larger multinationals with an international footprint. After a severe sell-off in the first half of 2022, small caps could be due for a recovery. Jurian Timmer, director of global macro at Fidelity Investments, told the WSJ that, "I would argue that a lot of the bad news is probably already in small caps. That's a glass half full way of reading the tea leaves." Number 6. 7 small cap companies you should look out for in 2022. These 7 small cap stocks could be among the biggest outperformers from the second half of 2022. Arch Resources, or ARCH. Monetizing coal inventories will likely boost revenues for ARCH stock. Avantis US Small Cap Value ETF, or AVUV. This ETF could outperform in the months ahead as bulls return to Wall Street. Consol Energy, or CEIX. Growing demand for coal puts CEIX stock in the spotlight of investors. Coursera, COUR, double-digit growth potential in online education could bolster revenue for COUR stock. Dynavax Technologies, or DVAX, expansion in the adjuvant pipeline could be a significant catalyst for top-line growth. Fate Therapeutics, or FATE, approval for clinical trials will improve FATE stock's growth prospects. Tenable, or 10B, rising cybersecurity needs and the growing number of enterprise platform customers could create lucrative gains over the long term. Thank you for staying tuned. It's now time for the bonus fact. Did you know that a stock smaller than a small cap is known as a microcap? That is a publicly traded company with a market capitalization of about $50 million to $300 million. What are your thoughts on investing in small caps? Let us know if it's for you or not in the comment section below. If you enjoyed the content, uplift the channel by hitting like, subscribe, and ring the YouTube bell to meet us again in the next video. Until next time!